the E27 Meet the VC webinar. Okay, so my name is Nick. I'm from E27, and we started the E27 webinar series to facilitate learning and development of the startup community in Southeast Asia, right? So the Meet the VC series is aimed to help you know our VC more in detail in our ecosystem to better understand and foster matchmaking. So kindly note that the session is recorded and we'll be sharing the video and article on our site. So today we have Wanying Zhang, investment manager at Qualgro. She has spent 4 years at Qualgro and has end-to-end experience across investment processes, including deal sourcing across Southeast Asia and Australia, and due diligence, portfolio management activities, and etc. Right? So let's get to know Qualgro better. So Wanying, let's start with the first question. All right, so obviously Qualgro has been here for a while already, and I'm not too sure if a lot of our audiences know more about Qualgro, but could you just briefly explain your motivation for the launch of the venture fund, and what was the main idea behind founding the VC firm? Perhaps a short history.
Sure, definitely. Maybe before I start, thank you so much again for Nick and also the E27 team for having me here today. And I'm very excited to also have the opportunity to share more about Qualgro with everyone. And I also look forward to connecting with more friends after this session as well. So maybe also a brief background of Qualgro. We are a venture capital fund based in Singapore, and we invest mainly in Southeast Asia, as well as Australia and New Zealand. And in terms of focus, we primarily invest in B2B technology companies at Series A and B. And actually, we're a small team. We're a team of 10 with 6 different nationalities. So actually, we're quite an international team. The reason why we chose to launch the fund in Southeast Asia in 2015 was because that we had the conviction that this region will be able to produce the same quality of talents in technology in particular, just the same way as the other regions do, like the US, Europe, and China. And we want to back those entrepreneurs to build regional or global companies. And the reason why we chose B2B was because even more so than now, back in 2015, we don't think a lot of investors were focused on B2B. And also back then, there were fewer B2B companies as well. But we do think that there's a great potential for this region to produce international B2B technology companies that are really just as good as the other regions. So we want to also support founders to do that. And also another reason was because the combined experience of our team were really mainly on the corporate, the business world, with the knowledge and also necessary connections. So we want to be able to help our B2B founders mainly to really navigate the cultural differences when they expand their company regionally or globally in different countries. So those are a few key reasons for us to have the current focus of the fund. And also another anecdote was that our founder, managing partner, he was actually born in Southeast Asia, but he grew up in Europe and also spent decades working in different continents. So actually he hoped to bring his experience and also knowledge back to where he came from originally to be able to also contribute to the local tech ecosystem.
Okay. Yeah, that's nice to know. So could you also share, right, what differentiates Qualgro compared to the rest of the VCs around the region?
Maybe I will talk about both in terms of investment philosophy as well as how we work out with our companies. So, but I think I wouldn't go through the whole checklist that VCs really tick their boxes, because I'm sure everyone is very familiar with that. Maybe 3 points to raise for Qualgro in particular. First one, we do have a preference for founders who have the ambition to build at least regional or global companies. And when we look at our current portfolio right now, actually, we have 19 companies out of 24 who are operating and are selling into more than one country. And actually, the largest ones are operating already globally with a few hundred employees over different continents and also double-digit million in revenue annually. So we do think that this region will be able to produce more of these kind of companies. The second point is more on a focus on real and sustainable competitive advantage on two fronts. The first one is more on technological advantage, defensible, differentiated technology. And a few examples in our portfolio include conversational artificial intelligence companies, robotics companies, intellectual property, search and analytics databases. So those is one category. And another category is more advantage based on exceptional executional skills of the founding team, but of course also backed by robust and scalable technology on the back end. And I think a more familiar example with everyone might be Shopback, which is a cashback site across Southeast Asia and also in Australia and New Zealand. So those are the two types of companies we look out for when we talk about advantages. The third point is more around an emphasis on path to profitability. We don't require the companies to be profitable or soon to achieve profitability at the time of investment. But even when we assess pre-A stage companies, for instance, we do emphasize on whether there's a clear path to profitability with the current business model. And so far, we have not invested in capital-intensive businesses. So those are a few points we really look out for when we make the investment. And also post-investment, we prefer to work with our founders quite closely, but not really on operational level. It's more from the strategic angle to add value from where we can. Maybe I'll just very quickly share two examples on where typically we add our value around organizational and also commercial strategy. Okay. The first example would be a SaaS company that is operating globally. So actually when they expanded their executive team in the UK, they already have presence across Europe, in US, and also in China, and as well as Southeast Asia. But when they design their organizational chart and also recruit new talents in the senior leadership team in the UK, they were quite shocked by the cultural differences, the extent of it, and because the founder spent most of his life in Asia. So with our team's experience and understanding of Europe, we actually flew to London a few times to really sit down with him to define a different organizational chart from the Asia one. And also we participated in a few interviews to really help them screen the new candidates, taking into account the cultural aspect of it. So that's the first example on more organizational help. The second one is another global company that actually faced some challenges when retaining some of their top customers. Those are global brands as well, due to some changes in their organization. And for that company, actually, we sat down with the team and spent quite some time to actually go through all their top enterprise customer names one by business units and by geography, as well as by which product they're selling to them, to help them really identify which should be the first customers they go to identify the issue, and also which particular business unit they should talk to be the most effective in terms of understanding the issue and also to better serve the customers. So those are some of the things that we really hope to leverage our experience and also network to help our entrepreneurs, both in good time and also, of course, challenging times.
Okay, yeah, that's pretty interesting. So Qualgro actually not just help them invest money, but also engage the team on a very personal level, right? To help them understand the whole business in and out and help them grow. Okay, that's good to know. So I want to touch upon earlier you said that you guys were interested in investing in companies that are Series A or B, right? Mm-hmm. Does that mean there is, let me rephrase that, right? Is Qualgro open to sort of like look for or engage startups that are not at Series A yet?
Yeah, definitely. So in terms of stage, we are primarily focused on Series A and B, as you mentioned, but I would say roughly that would be maybe 80% of the portfolio, because we can still be a little more flexible in terms of going a little earlier, pre-A, or a little later, so Series B plus. And that means our usual ticket size for Series A and B are US dollars 2 to 5 million in the first ticket. And of course, we'll reserve for follow-ons. But for A or Series B plus, we'll adjust accordingly to smaller or larger ticket sizes. Okay.
So currently, how does Qualgro source for, typically, right? How do you source for your deals, or how do you source for startups?
Yeah, I think the main way is really quite common among different VCs, which is via referrals from our friends in the ecosystem, from the other VCs or corporates, accelerators, ecosystem players like E27 as well. That's really the main channel because our friends know our preferences and criteria quite well. So they refer relevant deals to us and we appreciate that. The second one is actually a more in-house developed tool that we use to really screen the market from different channels. And we do this to identify proactively potential interesting companies for ourselves ahead from when they raise the capital. So we can reach out to them more proactively. That's the second way. And I think recently E27 also introduced E27 Pro, which is quite a new and interesting channel for us to diversify.
Yes, I know. Yeah, I noticed you guys are a pro member with us. Yeah.
Yeah. So I think it's really interesting. We were able to make quite some connections directly with startups via E27's introduction. And also, I think on a weekly basis, we are receiving constant deal flow from this channel for startups to reach out to us as well. So it's a great way for us to diversify our channel.
Okay, good to know that the Connect program has worked well for you. We've also heard a lot of good stuff about it. Okay, so next question would be, for our audience, right? They could, I think they would want to know, right? What are the most, I would say, what are qualities or traits, right? What are the most important ones that you would look for when you engage in a founder?
I think for sure, most investors would think team is really the most important criteria on their checklist. And this boils down to what particular qualities we are looking out for in founders. I think different VCs definitely have different preferences. For instance, I know some of them, they may prefer serial entrepreneurs or entrepreneurs who are more experienced in a particular sector that startup is in. For us, actually, we are quite flexible in terms of the hard requirements, in terms of the profile of the founders. So we have older or younger entrepreneurs in the portfolio with very diversified background. Some of them, they start their business out of college, and some of them, they really work in the industry for maybe 2 decades before starting their business. So it's a highly diversified profile of entrepreneurs. We focus more on a few fundamental traits. The first one is really value. We want entrepreneurs whose values that we can align with and also appreciate to start a company rather than, just making some money, right? And the second one is really whether the founder has a high vision and drive to really build, as I said, a scalable regional or global company rather than a more SME type companies. That's the second point. The third one is really whether the founder is resilient enough, because entrepreneur journey, as we all know, is very, very challenging. And especially now during this period. So we really look out for that resilience in order for the founder to go through that tough challenges. Of course, we want to be with the founder in this journey as well.
Okay.
And the next one is that we want to see a great team builder, meaning the founder has to be able to attract as well as retain and grow talent over time. And of course, also grow alongside the team at the same time, because the founder has to solve very, very different challenges at different stages of the businesses. And we do see them sometimes when, for instance, they reach certain stage, their capability might be a little capped if they do not really constantly upgrade themselves. So we really want founders who have that level of self-awareness to really know where his or her strengths and weaknesses are, and to know how to constantly improve on that. And of course, at the same time, we hope that the founder should be open to learning from different people, including his or her own team, his or her own clients, investors, everyone that he or she interacts with. So those are a few very important traits that we look out for in the founder.
Okay. How about mistakes? Maybe could you share a little bit what are the most common mistakes that startups do when they approach Qualgro? I think that would be very helpful to the audience. Yeah.
I think that's a very interesting question. And I think most founders are very familiar with the typical things to check when pitching to VCs in general. But I think actually for us, we noticed two things. The first one is sometimes some founders tend to be a little bit less open or a bit defensive way in terms of, sometimes we want to just brainstorm an idea, for instance, on the competitive landscape or how this landscape is going to evolve. So we hope to have more open discussions in order to know, first whether we really understand the strength and potential areas of improvements of the business. And second, we also want to see whether we will be well positioned to add value where the business really needs those help, right? So we really hope to have more open and collaborative discussion rather than that we are questioning the company. Because regardless of the stage, whether it's an early startup or a mature one, every company is bound to have some areas of improvements or where they need more help. So we want that level of openness, which is very important. The second one is more around, it's an interesting trend that we noticed in the past 2 years where sometimes founders see a successful fundraising as a very, very important key success factor of the business. I do think it's true to a certain extent, but actually in some situations, we actually advise the founder to lower the amount that they should raise because it helps them avoid too much dilution, right? And actually, they tend to sometimes overestimate how much cash they will really need in order to go through the next 12 to 18 months. And a lot of times founders would have some mentality that a big raise means a successful raise. I think it's true to a certain extent, but we also want the founders to really be more familiar with how much cash they really need in order to also avoid too much dilution for themselves.
Okay. So I want to visit the portfolios for Qualgro's, right? How is Qualgro's portfolio doing? Does Qualgro expect any exits in the near future?
Yeah, I think this is an interesting topic to talk about now. For us, actually, very fortunately, most of our portfolio companies are doing well. And I think part of the reason is because we are more B2B focused. So those businesses tend to be a little less impacted by the current COVID situation. And most of our companies actually, they raised in less than 12 months. And right now they will still have at least 12 to 18 months of runway. So for that, we are really very fortunate. And so far in our whole portfolio of 24 companies, we have had no write-ups, fortunately as well. So most of the companies are past the stage of, I would say, survival mode during the current virus situation and are moving on to really look for the next growth opportunity. In terms of exit, very fortunately, we exited from a company called WaveCell last year, and we actually was awarded the exit of the year by SVCA. So we're very happy about that. And actually the exit returned us a blended multiple of 10 times just in 4 years. So we were very happy about that. And definitely we hope to see more of that happen in the next few years.
Okay. Are there any of your companies in the portfolio that is facing challenges to this pandemic? And is there any advice that you can give either to your portfolio or to some of our audience who are founders of companies as well?
I think definitely a number of them have to really, readjust their growth plan or their team structure during these tough times to reserve cash to extend their runway for sure. But actually, interestingly, sometimes we suggest some of our companies to not to be overly conservative, especially when there's good fundamentals in the business, because we think this is really the time for them to leverage the opportunity to expand and grow if they have the capacity to do so, rather than to be more cautious and extend the runway. For instance, for one company, actually, we invested earlier this year before COVID-19 hit. we finished the investment in this pre-A company. It's a SaaS company. And then just after the investment, the COVID hit and it impacted the whole growth plan for the company, at least for this year. So that I think really was quite a big change for the founder, especially Series pre-A founder who have not been so familiar with overcoming these type of challenges. So for that company, actually, we seconded 2 colleagues from our small team to that company, meaning the 2 colleagues have been spending about 70–80% of their time in the past 2 months to really work alongside the management team to help them really pivot their growth strategy for 2020. And the way they did that was really to help the team launch a very special initiative to really have a big PR push, leveraging the core product of the company. And by the end of the 2 months, we were very happy to see that the company was actually cited as a thought leader by both Straits Times and also Business Times at the end of the 2 months. And we are very, very proud of our founders to be able to do that.
Okay, that's good. I think I have one last question for you before we move to the audience's question, right? So has the COVID-19 situation affected the way Qualgro is approaching its investments?
I think in terms of our investment philosophy, it hasn't changed really, because all this while we have been focused on, backing companies with real competitive advantage that is sustainable in the long run. And also, we always look out for path to profitability instead of looking for really capital-intensive business models. So those philosophies stay the same for us during this period. Interesting trend we notice in the market is some valuation changes in the market, actually in 2 ways. Because on the one hand, you have some companies that are really more resilient with more robust business models. And those companies are always approached by investors for investments. And interestingly, we do see sometimes valuation even goes up for some companies in this period. And on the other hand, definitely there are some other companies who are in more urgent need for capital. And those other companies might be facing some valuation adjustment downwards in this situation. But those companies are not necessarily not performing as well. It's just that they are in more urgent need for money. So for us, I guess our overall investment strategy and also focus still stays the same, as well as our philosophy. It's just that we are still open for looking for new opportunities, but we want to just be a bit more cautious and focus even more so on business fundamentals rather than market momentum. Okay,
that's good to know. So I'm going to go right to some of the questions from our audience, right? Sorry. Okay, so we got a question from Mr. Daryl, right? Can Wanying share some tips, best practices, or even specific examples of how a startup founder can recruit and attract talent in this point in time?
I think it depends on different stages of the startups. Well, what we often see is that for usually pre-A or seed stage startups, the founder really leverages the network to gather some capable people within his or her network and has the same vision and drive to be able to build the core founding team. So this one is one approach. And when the startup scales up to, say, more growth stage, maybe Series B and beyond, then the startup starts to hire people with more experience, with more functional expertise, sometimes from more established startups or even corporates. And in these situations, what we do see is that founders usually look out for people who have the capability, the functional expertise, but more importantly, founders want to look out for people who have the entrepreneurial drive. So the cultural fit has to be there. And we do have a few portfolio companies that are Series C and D facing actually quite some challenges in terms of attracting people, not of the best profile, but in terms of the best cultural fit. Because ultimately the culture in a startup world is very, very different from what the corporate people might be used to have in the more structured and well-organized corporate world. So that cultural fit to us actually is sometimes even more important than the on-paper capability and profile.
Nice. Okay, I think we have questions. We have time for one more question. This is from Belbe. I think there's two parts to this question, right? So the first part would be maybe know, when they reach out to Qualgro, who should they reach out to Qualgro if they're keen to work out with Qualgro? That's the part one of the question. Part two would be on the assumption that the company passes due diligence. How many months on average is required, right, for them to say from handshake to maybe receiving the investment? What is the average sort of investment cycle that you guys are looking at?
The first question, let me just clarify: who in Qualgro people should reach out to
Yes.
investment proposal? Okay, for this one, it doesn't matter. Everyone in Qualgro is open to receiving investment opportunities. And also the best way I would say is to get some warm introduction. Of course, we have inbound deals, but at the same time, a warm introduction would work a bit more efficiently compared to reaching out directly. That's the first question. And the second question, in terms of the time frame, from the first handshake to closing the investment, this really depends. We have interesting experience of closing a deal in less than 1 month for the entire process. And some other, yeah, this is very quick. And some other situations can drag up to a few months. So I would say it really depends on the shape of the fundraising round. It depends on, what's the time frame on the startup side to really, gather the investors in one round, because oftentimes it's not just one single investor, it's a group of investors working together. So there's a lot of variations. And then the second one would really also depend on whether, who is the lead investor and how much, what is the time frame the startup is looking to close. But I would say typically the whole process would take 2 to 3 months on average.
Okay, all right. I think there's no more questions, but I'm sure that they can reach out to Qualgro yourself and also the company if they have any questions. So thank you so much. This has been a highly engaging session. Also, I'd like to share, right? If anyone in the audience is looking to connect with more investors like Qualgro through the E27 platform, and also any future activities and engagement that E27 pushes out, right? I'd like to urge you guys to check out the Pro membership page. The website is listed on there. The benefits are there. If you have any questions, please reach out to us. And next up, we have the next Meet the VC webinar series with Jeff Lin from iGrow Partners on June 18 at 2 p.m. Singapore time. So make sure you register to it. Meanwhile, you can connect with us via Facebook, LinkedIn, Telegram, and Instagram for more community discussions. So again, I want to thank you, Wanying, for spending 30 minutes with us and sharing more with your audience. And I want to thank everybody for joining the webinar. So thank you and take care, everyone. Bye-bye.
Thank you so much, Nick and E27, as well as everyone here. I look forward to connecting with everyone afterwards.
Okay, thanks. Thanks, everybody. Bye.
Bye-bye.